Hello, good morning, everyone. My name is Samson. I'm a CEO and founder of Coinstreet Partners. Today is my great pleasure to be the moderator of our very exciting panel. Is about the topics of new market opportunities for tokenized assets and digitized securities. So I have been involved in the industry, fintech industry for over 20 years, since doing a mobile payment at the dot-com days. I've been involved in many organizations, profit, non-profit, helping to push and develop the ecosystem. Coinstreet Partners is an award-winning global decentralized investment banking group. It's also a professional fintech and digital asset consulting firm. Okay, so before going into the panel, I would like to give a quick market status about tokenized asset and digitized securities, right? Where we are now, is it still just a concept? Is it happening? We heard a lot of news from different sources, so I'm gonna give a quick snapshot, right? First of all, according to the World Economic Forum reports, they projected that the tokenized asset market will exceed $24 trillion by 2027. So as you can see on the chart, we are right here, 2020, right at the start. From another perspective, if you look at the asset allocation according to market capitalization of different asset class, digital asset at the top is only very small portion of the total capital market, right? But one interesting fact is that digital asset is the first new asset class in 20 years since ETF has been invented in 1990 in Canada. Also from another perspective, from this very small portion from digital asset on the total market capitalization is actually contribute 30% of the transaction volume and turnover of the total capital market now, right? So it is very significant in terms of turnover volume. And if we look further, a lot of major operation actually coming into this space and launching different projects, right? Starting with the big banks from the US, Wells Fargo, JP Morgan, they all rolling out their stable coins. We look at a larger financial institution, they are issuing bonds in different types in tokenized formats in Europe and also in US, big mutual funds as well. And our friends here, Morningstar, also roll out the first rating product on digital assets. If we look deeper, it's not lacking of government or big banks issuing tokenized security products around the world. And this is from also our friends from Crypto Valley, their recent report for PwC. Maybe we can get more insights from them later on. Right? If we look at some of the recent news, right? SEC already fully regulated, approved stable coin can be a deposit in the regulated bank, right? One of the early days, crypto exchange Kraken in US upgrade themselves to become a proper commercial bank. Look closer in Hong Kong, we have our regulator approved the first digital asset trading venue in Hong Kong. So STO exchange become a reality in Hong Kong now, right? And of course, you heard a lot from the news, digital renminbi just around the corner. They already doing trial in China and Hong Kong as well. And just a news 2 days ago, China Construction Bank actually issued 3 billion worth of debt over blockchain. And we look further, over 15 countries have defined regulatory framework for blockchain-based security tokens report. So many things happening, very hot market. What is going on? So today is our great pleasure to bring together, and thank you for Hong Kong Blockchain Week for coordinating this, a very amazing panel with experts from different backgrounds, from capital market, technology firms, rating agents, ecosystem building. So without further delay, I would like to bring out our guest panelists from today. First, Martin Sabine. I would like to pass to Martin to introduce himself. Oh, actually.
Okay, Sam. Hi, everybody. My name's Martin Sabine. I'm the chairman of the Somerley Group. That's a Hong Kong-based corporate financial services group. And our clients are mostly Hong Kong listed companies. I've been working in the financial markets in Hong Kong for about 40 years. And during that time, mostly this is has been a conventional sort of business. The precedent is honored and established structures and procedures followed. But now I think there's a wind of change blowing through the markets. We ourselves became a listed company 3 years ago with the ambition to expand our range of services. And the whole fintech area is central to that. And we're convinced, in fact, that this area will disrupt and enhance financial services in Hong Kong, and our clients, will expect and demand that sort of service from us.
Right. Thank you, Martin. Well, we look forward for your sharing later on. All right. So may I also introduce Amy from Crypto Valley?
Hi, everybody. It's a pleasure to be here, and I'm blessed today with the sun in my face. So it's a sunny day over here in Zurich. My name is Amy Lorincz, and I'm wearing my hat today as a Crypto Valley Association board member. Besides that, I have the pleasure to cover Ledger's enterprise solution in EMEA, the Ledger board, and I'm also on the council of the Banker Foundation, and excited to explore the topic of today with you all.
Thank you, Amy. Well, may I also introduce Chris Carlin from Morningstar?
Hi, everyone. I'm Chris Carlin with Morningstar. Been here about 4 years looking after data products alliances for the Asia region. As Sam had mentioned earlier, we rated a crypto asset earlier, a token, for a debt instrument. And it's something that we're looking to do a little bit more of as these instruments come online, and really excited to be a part of this discussion.
Thank you, Chris. And last but not least, may I introduce Nitin from IBM?
Yeah, thank you, Sam, and really glad to be here. My name is Nitin Gaur, and I serve as Director of Financial Services and Financial Sciences and Digital Assets. I've been in this space now since 2012, so it's been eternity. And as a part of my role, my job is to be able to bring in an understanding as well as our technology to be able to have the large financial institutions adapt themselves to this evolution that digital assets and crypto tokens bring to that entire ecosystem in terms of market, in terms of market infrastructure, but at the same time, understanding some of the technology requirements that many of the regulators require many of the financial services to adhere to. So really excited to be here. I'm excited to sort of learn and share from my experiences with the panel.
Thank you, Nitin. Well, and I'm Samson Lee. I'm the CEO and founder of Coinstreet Partners. I actually hosted the STO panel also with Hong Kong Blockchain Week last year when we were still able to host actual conference at the airport, right? This year we are hosting this virtually here, but it's great. We have guests from different continents, different background. And 1 year passed by, we have seen a lot of things happening in this ecosystem, right? It's very exciting, positive progress. So I want to start out with getting a view from different guests of what role do you see asset tokenization and digitized securities can play in the future, or maybe near future of the financial market, and where do you see the new opportunities laid, right? I would like to have a more interactive discussion, feel free to jump in, or if you disagree, any comment. But may I invite Martin maybe to share your view first? Because I think no matter what we do, right, we cannot be away from the traditional capital market, because it is finance, right? Maybe a different ways to doing the finance, or new ways doing things, but I think the fundamental is still be there. So I would like to get your view to get our discussion started. Martin, would you please share some view of how do you see?
Okay, yeah, Sam. Well, look, that's a big question. I'll try and start the ball rolling. And I mean, in principle, I think many of the conventional financial transactions can be tokenized or benefit from digitization and blockchain technology. And I do see this is beginning to happen. Although, as I mentioned before, there's a certain inertia in traditional capital markets. People are used to doing things in a certain way and tend to resist change initially. But I think very soon a network effect builds up, and the potential is really runs right through financial transactions. I mean, just a couple of examples that I looked at this week as we were giving prizes. I hope I'm not giving anything away, but I mean, traditional equity raisings, for example, there was a hedge fund. In some ways, it's a conventional open-ended hedge fund, tokenized with blockchain technology. But the advantage basically is that it gives you additional flexibility and additional liquidity. So, typically a hedge fund, a specialist hedge fund, or a private equity fund will require quite a substantial lockdown, maybe 3 years, maybe longer. But if you have tokens and you have them on an exchange, you can provide some liquidity without problems in the underlying fund, which will take on investments which are not very liquid. So you provide liquidity and flexibility for the investors without penalizing or limiting the investment plan of the fund. And that particular one was also fully licensed by SFC. I think that may be a topic we'll come on to, but I think regulation is clearly going to play a key role. I mean, another example, more like a loan. This was a company that was extracting certain minerals from seawater. And they had, I mean, it was structured and described as a secured loan. They had a trustee which held a physical product. And the tokens were exchangeable for 10 grams of magnesium. I'm not sure whether you want 10 grams of magnesium, but that was a structure which was really, when you looked at it, pretty safe. It had a trustee. You could at any time exchange your token for a certain amount of product, which has an open market, perhaps not in amounts of 10 grams, but generally speaking, an open market. But on the other hand, in due course, this could be repaid. So, just a couple of examples there. I think you could go through, I mean, for us with IPOs and so on, I think that's probably an area where the transparency and efficiency could be improved. But just sort of starting off with two fairly standard things, equity raising, loan raising, they can benefit from these new developments.
Interesting. Yeah. Thank you, Martin, for sharing. Well, everyone, for your information, Martin's chairman of Somerley Capital. Somerley Capital is one of the most active firms in the corporate finance advisory field in Hong Kong. And by the way, Martin, congratulations. I heard you guys just won the 2020 Merge Market China M&A Awards and be the Financial Service M&A Financial Advisor of the Year.
Oh, okay. Thank you very much for that plug, Sam. That's true. We did, yes.
Yeah. So it's very interesting from your comment. So you do see actually tokenization can bring value as from your example on the first example on the funds. Obviously, funds is very traditional product, but it is actually can make it become a better product, right? Bringing in extra liquidity, cross-border trading, and things like that. And on your second example, it can actually create new financial product that doesn't exist before, right? So this is very interesting.
Yeah,
so,
that's a fair summary. I think it can either build on features and improve the efficiency and flexibility of the way things have been done traditionally, or it can, really beat a new path, and people will, have to get used to that in due course.
Mm-hmm. Yeah, very interesting. So may I then ask your comment, Emmy, because as I mentioned earlier, like I know you guys like Crypto Valley have been working very closely with PwC on the crypto report, right? Since I think maybe 2017 or 18, and now it's the 6th edition, and you guys have done extensive research on the global basis. So how do you see this is happening in terms of the convergence and the new companies and project coming up, and where's the industry is heading?
Thanks for the opportunity and the question, Sam. So basically, security tokens are this new layer, or not layer, but this new invention of DLT, and we believe that it's bound to be mainstay. So it's going to be the centerpiece of future security value chain landscape. And the opportunities we see now shaping will reset the environment that will provide greater efficiency, transparency as regards to the security issuance, trading, and also post-settlement. So I can echo you all that it's definitely going to offer us greater efficiency. What's also important to add that in Europe and in Switzerland, we need that authorities acknowledge that DLT, and this already happened in Switzerland with the blockchain law in September now in 2020, they have to acknowledge that security tokens can provide clear and added value in terms of post-settlement trading issuance. And shall also add that if we just think about that, the global real estate market, the total value of the global real estate market is 280 trillion USD. And if we only tokenize just 1% of that, then that's 2.8 trillion. So it's a huge opportunity, what is unfolding in front of our eyes. We, of course, need more clarity, and not only on the legal aspect, but also when it comes to interoperability between various ways. I mean, Ethereum is one of the, not preferred, but probably the most popular chain on which the ERC 1400 is a token what many players use. And it's important that if someone is not using Ethereum, maybe can also trade with another token, which is supported by another infrastructure. So another way, or another aspect which I would like to touch on, that we will see lots of synergies and opportunities between security tokens and DeFi. For example, if you use your security token as a collateral in DeFi, in a DeFi app like Maker or Compound, that is of great use. And tokenization will push the marginal cost of creating a financial asset down. Just imagine that right now creating a financial asset is not necessarily cheap, and I believe that the cost of this is going to be much lower.
Mm-hmm. Very interesting. Yeah, thank you for your sharing. So going back to your point about tokenizing real estate, right? And together with the earlier point that Martin have raised about creating a tokenized fund, right? So let's just go down for that path, right? Because, for example, on the conventional market, we know fractional ownership is actually not a new thing, right? Because when we buy a REIT, right, we talk about real estate, a REIT fund is actually fractional ownership. I buy shares of a REIT, right? And is real estate. So how do you see, Martin, right? And let's have some discussion here. Say if we go to tokenizing real estate, right? There are, you know, a lot of real estate funds out there, but now there's real estate tokenization, right? How do you see, or anyone, right? Like, how do you see this might be heading, right? In terms of comparing to the traditional REIT structure and things like that, you know?
Well, let me just comment briefly, because I think I've had my turn. But yes, I mean, as you mentioned, fractional ownership through REITs, which have had pretty broad acceptance. They haven't really got off the ground so much in Hong Kong. They've had no particular tax advantage here, but Singapore is a big center, and also Australia and the States, of course. So I think, yes, the principle of fractional ownership of real estate is pretty well established, and I think, you know, the concept of tokenization can build on that. Perhaps I'll let other people comment.
Mm-hmm. Yeah.
So maybe
Chris, so now with all this new product coming up, you know, please go ahead.
Yeah, no, I think, you know, Martin, to your point, I've written about this extensively in terms of what I use the word instance economy, as opposed to that essentially what fractalization does. We do two things, right? One is you're relying upon the ability for us to not just fractionalize the asset from a systemic perspective, but also take the fraction of that fraction, which creates, so truly trying to create a global market of bankable and non-bankable assets, which is ability for us to create value from the assets that are not in traditional asset class space. But essentially, we are truly trying to go after the global marketplace, which sort of creates not just the consumers of this technology, but also creates a much larger access points to these markets, creating more liquidity, as you mentioned, as Martin mentioned earlier. So think about sort of one asset class, one set of rules, global markets, and regional access points where you could provide some level of enforcement from a regulatory perspective, thereby creating sort of a much larger marketplace, much larger liquidity pools. I think in general that has a exponential effect, or what we've been now calling exponential finance, which allows us to be able to truly address the global accessibility to some of these products that historically have only been limited to the developed or many of the advanced economies. And I think that has an uplifting effect or uplifting impact on various sort of sectors of economy which have been left out. So there has a both element of financial inclusion, but it also has the element of creating much larger marketplace, which has been the sort of proverbial goal of many financial systems across the world, I think. So I'll pause at that and love to get the comments from the panel.
Well, I think with the inclusion thing, one of the things that I saw talking to Fusong Exchange here in Hong Kong as they're coming online was investor education. I think it's one thing to make something available to a wide audience. It's another thing to, especially when you go to the mass retail, to have that audience understand what they're purchasing, how they're purchasing it. And that brings up other things like compliance across jurisdictions. We saw on some of the tokens that came out this year, a lot of restrictions if they're not inside the US. US people can't purchase those securities. And so I think, and also security, people need to be convinced that these are safe investments as well. And they're not going to be, you know, the headlines obviously are the stolen Bitcoins, but people need to understand the security level that they're entering into as well. And then I think from a Morningstar perspective, where we do rate these types of assets, mainly debt securities, public equities, and funds, we can add, some transparency to that process by providing a rating for some of these assets if they're digitized. What we normally do now, we're rating the paper instrument, but as we go forward, I think we'll see a lot of securities listed solely in digital form as well. So I think that's where Morningstar's that's where I see our role coming in the future, as we reach that inflection point where we're no longer looking at paper instruments behind digital tokens, and we're looking at purely digital instruments. And that's where I really hope that we get to. And I think that'll happen slowly and then very quickly over time.
But I do like to discern one thing, and I'll say this very quickly. I do want to discern between dematerialization and digitization. And there are two different elements. Yes, we have seen with REITs and many of the other elements of what we have done to sort of create the digital space. But in true sense of what I think, Emmy mentioned earlier is the ability for me to take this token and move the token, which means the movement of that asset is the final sort of change of ownership, change of transfer, followed by a settlement, as opposed to relying on these massive back office function that adds to the cost of the trade. So I think it's dual element, right? One is we are relying upon finality of the transaction, at the same time, there's a cost reduction effort. And of course, the regulatory elements could be done at the endpoints. And I completely agree with you, Chris, that just because you make it democratic doesn't mean that it's educated. You have to have some level of education that has to follow that, I think.
Yeah.
Yeah, I think having some standardization on the rating is very helpful, especially for if we really want to have the institution coming into the marketplace, right? So because it need to be, different product need to be benchmarked, and how do you see, Chris, from the rating point of view? You guys obviously very experienced on the conventional side. When you're starting to try to rate some of this digital product, what do you see are the challenge and what need to be added to your existing models and things like that?
Well, and I'm not sure Morningstar will fill this role. And so when we rated the Fat Brands tokens, we rated the two debt instruments behind those tokens. And when that press release came out, at least I saw on Forbes, I was cold called by people who had tokens they wanted rated from all over the world, from, I would say from Israel through to parts of Asia. But a lot of those tokens are very small, privately held companies. And I think that's where I see the issue coming in long term, is the information needs to be available in a way that we can rate those instruments, and those instruments have to want to be rated. So they have to provide the information. And I think you need companies that are going to provide that transparency, make that information available to analysts to do the research, then publish a fair rating on those assets. And I think that will feed then the institutional side that may have that as part of their investment process. And I think we can get to that point for some of the really large securities that I see coming online. There's some big debt securities in the US that should be tokenized very soon, either later this year or early next year, where I think we might have a hand in rating those securities. So I think there's two spectrums of the market. One is a very small spectrum. And I think there's some niche players that can fill that role, and that's probably not a role for Morningstar. But I think in terms of true large-scale institutional investments, that's a role I believe we can play. And I know we can play in the debt markets. And certainly if mutual funds were to be fully digitized in public equities, that's an area that we do have focus, and we do have analysts covering the market.
Right, yes. Well, so Martin, I have another question, because in the conventional, investment banking, people often talk about underwriting, right? And we don't see this happening in the STO digital space yet. Do you think this will happen in the future, with maybe more rating product, or because now I think one of the big challenge of the industry is the liquidity, right? People do an STO, sometimes they might not be able to raise the full amount. Some of them actually below the soft cap and they cancel the project. So do you see there will be a role for investment banker or some really underwriting process been happening, and what it takes to make that happen?
Yeah, it's a very interesting question. I mean, when you talk about underwriting, in fact, at least in the Hong Kong market, and I think in most Asian markets, the so-called hard underwriting has pretty much disappeared. So a lot of it is best efforts if it's for secondary listings and otherwise on IPOs. It's really a selling job. So now the underwriting technically is only done right at the end of the process of book building and selling. And of course, there are challenges to that traditional market with, say, direct selling and these SPACs, special acquisition companies, and so on. So there's quite a lot going on in the market. The line between sales and underwriting is blurred. But I think in terms of providing liquidity for some of the token issues, I mean, the questions are the same. And I think when the market grows, as it will, then I think, as Chris is saying, there'll be certain smaller issues which may be difficult, just as liquidity is difficult for small listed companies. But for the larger ones, I do see that the investment banks will be drawn in. And just to expand that a little bit, what helps with liquidity is certainly, as has been said, a rating, investor education, but also a certain, if you like, accommodation with regulators. So, what's happening now, I think, with some of these issues is they're getting big enough to attract the attention of regulators. And at the moment, perhaps you have entrepreneurs on one side, regulators on the other, and it's not altogether easy match yet. But Ashley Alder, the head of the SFC here, gave a talk about a week ago which he enunciated a pretty clear principle, which was if it's the same business with the same risks, then it should have the same rules. And I think the industry, the new industry of digital securities and tokenized assets is going to have to embrace regulation a little bit. And that will bring it more into the mainstream. It won't be altogether easy, at least in Hong Kong. The regulations don't fit very well. Ashley Alder talked about tagging some additional regulations onto anti-money laundering. Well, that may or may not be the right way to put it, but I think we need to learn some lessons from, for example, Ant Financial here. And who knows the exact story there will only probably come out over a period of time. But I think one lesson is, if you get big enough, then the regulators will eventually come and look very carefully at you. It may take them a little while to cotton on, but you can't escape. And secondly, if the regulators don't understand what your product or the risks and the business very well, then trouble will come. So I think we need to be able to explain in layman's language, or clearly at least, same business, same risks, same rules. So what exactly is the business and what are the risks? Be upfront with that. So once you get a regulatory framework that people can be comfortable with, and you get investor education and you get ratings, then I think you really do have a powerful combination.
Mm-hmm. Right. Well, how about you, Nitin and Emmy? How do you see we can improve the liquidity of the market and get more people coming in? And I heard a comment earlier about DeFi. Do you see any breach between DeFi and security token space?
Absolutely. So where you can apply collateral in maker or a compound, and you can trade basis on that. Maybe one important aspect, because we have talked about what is the goal and what is the benefit for an institution when it comes to STOs and how they can save costs, and creating a new financial product is going to be much cheaper. But as a private person, I think it is amazing that it opens up a whole new spectrum for me, because I can invest in a private company before they go public. I can invest in NFTs, the non-fungible tokens. I can invest in art, in equities, in fixed income. And maybe today it's not that easy as a private person to invest in these assets. So the whole notion of democratizing finance is so much strongly there, and we should not have this panel without mentioning that. To answer your question further, I think that yeah, like you asked about regulation, right? Remind me of the last question. Sorry, Sam.
About liquidity and whether you see also like on the DeFi, because there's huge liquidity on the DeFi space now, right? Like
oh, yeah.
a lot of money there, right? Like,
yeah,
do you see a bridge, you know, channeling some of those into like more compliance? I'm not sure if DeFi is fully compliant, right? But I mean, like, you know, but what we are talking about, like fully compliant STO digital securities, right?
Yeah. DeFi is not regulated per se, and I also believe that it should not be over-regulated, or as in we try. Sometimes I feel like we have this notion of regulating something what kills innovation. Like if you over-regulate, then you really kill the innovative element of this whole new emerging space. So when it comes to liquidity, and we need more and more secondary market venues, which we don't have now. I mean, you just said that this STO exchange in Hong Kong has already launched. Great. In Switzerland, for instance, I can speak for the Swiss environment. As of 1st of August next year, companies can apply for an STO exchange license. Now, whether that is going to be easy to get, or it's going to be not too expensive so that it limits the entry for all these players who want to have the security token exchange license, we yet need to see. But we need all these venues in order for the secondary for liquidity to pick up. And
I think that's a great point.
Yeah. So I'll say this.
Nitin, I know like you have been like yes.
Yeah. So for DeFi, right? To me, I've been
with a lot of yeah.
There's
Yes.
there's a delay,
Please
but
go ahead.
there is a. So I've been heads down on DeFi for almost 8 to 9 months. To me, Martin, to your point, single marketplace, single set of rules, which attracts liquidity and transparency in general. You know, attracts capital. But you know, to Lori's point, I think in general, you know, DeFi is to me a basket of a bunch of, you know, which represents to me innovation in the product, you know, marketplace. So an ecosystem that attracts not just innovative products, but innovative technology that leads to, you know, creating an interconnected set of incentive economics of various systems, thereby creating in the truly global marketplace that Martin talks about. So DeFi to me, you cannot have a stable coin, you cannot have any of the STO or any of the instruments that are emerging in the digital transaction space, which is the crypto space. DeFi becomes sort of the all-encompassing term that could be utilized to be able to demonstrate the ever-growing ecosystem, which again, to me as a technologist, represents the innovation in products, innovation, and so we have to be careful, or at least, and I think it's refreshing to see the regulators around the world. We have to be careful that we don't stymie that innovation by over-regulating these DeFi products, but understand that there's a lens that we have in terms of regulation, and applying the appropriate lenses to various type of these securitized token or security token, and they're two different things. And then sort of create a framework, which I think Switzerland has done a fairly good job, and various other jurisdictions around the world, is to create that model which sort of not only keeps in mind the innovation, but also fuels the intent, which is truly, you know, doing what internet has done for information, doing what blockchain and crypto would do for financial products. So I'll leave it at that, but I think that's a really good point that both, you know, Emmy and Martin make.
That's great. Yeah, thank you for sharing. Well, time really flies. We are coming to the end of the panel. I'm sure we can talk for another 2 hours. So really thank you for all the insightful sharing. So I would like each of you, maybe you can share a wrap-up comment about what do you like to see to happen in the ecosystem to facilitate such vision of bringing the digital securities into a much bigger development and market and growth in the future. So feel free. Who would like to? Amy, please.
To go first. So definitely we need standardization and clear regulation, and also interoperability, which is a word I always pronounce wrongly, but you all know what I mean.
Yes, absolutely. Interoperability translate into global markets.
Correct.
Right. Yes.
Thank you, Sam.
Thank you.
Yeah, to me, ecosystem should enrich sort of the marketplace. That's the intention, by bringing in the diversity of various players, and that diversity itself brings diverse products, diverse technologies. And to what Amy mentioned, interoperability is a big part of that, which is the ability for me to move an asset in tokenized form in different networks, different jurisdictions. So I think bringing that diversity, both in sense of product innovation and technology innovation, is something that I think ecosystem should focus on.
Absolutely. Yeah. Chris?
Yeah, I'm really looking forward to, I think, the diverse products. I think we've seen, I've probably been 50 or 60 products this year that just amazed me, what people can come up with. And I like those ideas coming on market. And I want to see kind of that innovation drive then the technology, and then also drive the regulator. I like that they're keeping a bit of a hands off now. And I hope they continue to do that. And I think that'll really help the market grow. And then it will settle. I think it will settle when it finds its niche. But I'm really looking forward to it. It's really fun to watch. Every week I'm presented with a new idea. It's amazing.
Yeah, isn't it amazing now? People can tokenize anything, right?
Yeah.
Yeah, absolutely. Yeah. Martin?
Yeah, well, I agree. I mean, I think it's happening. I mean, it's beginning. I'd like to see, of course, I think the more people, the more ideas, they build on each other. You get this network effect, and the snowball builds, and hopefully it doesn't sort of overwhelm us all. I think there's a bit of a danger there that something goes wrong. The retail market may have to be treated a bit carefully. I think this is possibly something more for professional investors. Something like Facebook and Libra, they announce it, but then when people realize the implications, then it slows down again. So I think it's on the right track. The momentum's building, but let's not run before we can walk.
Yes, absolutely. Yeah. Thank you. I think just the fact that, look at our panel today, people from different backgrounds coming together, trying to drive the industry forward is an exciting step. And this is happening. And thank you for an exchange for providing this panel. So really glad to be your host, and greatly appreciate for all the guests. And thank you very much. So I think we will maybe wrap it up here. And thank you.
Thank you.
Thank
Thanks,
you,
Sam.
Sam.
Great.
Bye for now.
Sam.
Thank you. Bye-bye.
Cheers. Bye.
Bye.
May I also send in one message? Tonight, by 8 o'clock in Hong Kong time, there will be the award ceremony of TARS Awards. TARS Awards is the world first annual international award for tokenized asset and digitized securities. So there will be 10 winners will be announced tonight. Very exciting project. So stay tuned and look at the registration details on the Hong Kong Blockchain Week website. Thank you.
Thanks.
Thanks, Sam.
Thank you so much. Bye,
Bye now.
everyone. Bye for now.
Bye.
Bye.